Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have David Sherman, President and Portfolio Manager of CrossingBridge Advisors. We also have Giang, she's the head of ETF listings at Nasdaq. It's great to have you both with us. Welcome to Trade Talks. And David, I'd like to start off with you. We're going to discuss SPACs today. Remind us of the basic features of a SPAC and why they have been increasingly popular vehicles to access the public capital markets.
A SPAC is a blank check company. In other words, the cash that's raised in the IPO for a SPAC is held in a trust account on the benefit of the shareholders to be used for their redemption if they don't like the transaction that's being contemplated, or the SPAC doesn't find a transaction within a certain period of time, typically 2 years, so that effectively the shareholder that buys the SPAC has a cash account backed by T-bills and government bonds that they can look to if they're unhappy with the target that the sponsors approach. So they're principal protected in a very indirect way. That's one of the reasons they're popular. And then obviously you get to participate in the upside if the target is interesting.
And David, we're also here to talk about CrossingBridge's SPAC ETF. Tell us about the methodology behind it and what are the parameters for inclusion? Is it active? Is it passive?
So it's an active ETF. We're specifically looking to buy SPACs that are trading at or below their trust value. So effectively the cash that's sitting in collateral accounts, we're looking to buy it at that value or below. And then we will dispose of our shares after a business combination or at the time of a business combination. So effectively, we're just looking to own the shares from the time we purchase it at below trust value to the either liquidation date or the close of the business combination. And we're looking at that arbitrage spread. Today, you can earn over 2 to 3% just buying a portfolio of those securities.
And why is now the time to launch a SPAC fund and what makes CrossingBridge's unique?
So our firm has been invested in the SPAC market since 2005. What makes the ETF available today is the asset class has grown of a sufficient size that it can now support a publicly traded vehicle so that the individual investor can take advantage of this arbitrage opportunity.
And speaking of the growth that we've seen in the SPAC space, David, do you expect the momentum that we've seen in 2020 and 21 to continue, or has it peaked?
So I don't know if it's peaked or not, and I certainly think that the momentum has been quite great. I think it should slow down, but I do think it's an institutionalized product at this point. SPAC sponsors have moved to private equity sponsors and to venture capital sponsors and large institutional sponsors. And I think that this will be another asset class, just like private equity, that people will pursue. So yes, I think it's here to stay.
And Giang, tell us about the partnership with Nasdaq and CrossingBridge.
Yeah, thanks, Jill. We're proud to be CrossingBridge's partner for this first Nasdaq-listed SPAC ETF. Given CrossingBridge and David's expertise in the space and Nasdaq's leadership in SPAC listings, it was a natural fit for our two firms to come together for this product. So we've been in lockstep with David and his team throughout the listing process, with a particular emphasis on market quality and liquidity for this ETF to benefit the end investor and the product ecosystem around this product. We've also been extremely focused on investor education and awareness, so we're excited to be supporting CrossingBridge on content and distribution to ensure investor understands the structures of SPACs and what really differentiate this ETF.
All right, Giang, David, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Great,
Thank you for having us.